Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 20th of December, comes to you from London as we go into the Christmas week. There is a lot of red on the screen, so markets not looking good generally. So we're seeing the dollar is relatively flat this morning. It is in bullish territory on all three time frames. Remembering this is the weekly, daily, and 60-minute, long-term, medium-term, and short-term view of the market. If we're above the cloud, we're bullish. If we're below, we're bearish, and the corresponding point and figure targets. So that means the euro is just looking a little bit stronger this morning, but again, it's bearish on all three time frames. So just a short-term gain in downtrends. So no big moves there. Sterling just touching the 132 level at this morning, so that's we're hitting new lows here. Bearish on those medium and short term charts, and long term we're looking to go bearish as well. It's all about dollar strength at the moment, and sterling is actually lower against the euro as well. Looking at the Bitcoin chart, we're at $46,000 again, just into short-term bearish territory there, holding on to the bullish territory. We've got big waves on the long-term chart. Of course, the key thing is we hold these lows that we saw in the middle of the year. We still have targets to $83,000 provided we hold those lows. Looking at the S&P 500 index, we were down 1% on Friday. More importantly, we're down a further 1.6% on the futures today. Markets are being spooked, and of course the coronavirus stats are not looking great, which we'll look at in a minute. The Nasdaq down 1.5% as well, so the market's set to open sharply lower. The VIX volatility has jumped back into the mid-20s. The fear index is in positive territory on the medium and short-term charts, which is not good news for the markets. FTSE future sitting down 2% this morning. The DAX in Germany is down 2.4%, and the CAC 40 down 2%, as the market really digests the effects of lockdowns in Europe. We're seeing Tokyo down 2%. The Hang Seng was down 2%. The Sensex in India down 2.7%. So we're seeing a really big sell-off across the board. Oz actually was probably the most resilient market, just down 0.16%. We'll look at the energy mix in a minute. Looking at some of the soft commodities, we've got wheat down 1.2%, corn down 0.5%. So we're seeing across the board quite big moves. And the beneficiary today, of course, is gold. That's holding that $1,800 level just. We just tick below it as I speak. But we're sitting at $1,800 levels on gold. That is looking more bullish on that medium-term chart, as we found support here on the cloud. And, of course, gold is a bellwether when markets are fearful. That hasn't played through for palladium, though, which has more industrial demand, and that's down 3.2%, and it is still looking bearish on those medium-term charts. Copper, also a bellwether for industrial activity, down 1%, but still on the long-term bullish track there. US 10-year yields now heading lower, sitting at 1.37%. Markets starting to discount interest rate rises, as we're seeing a new wave of coronavirus kicking in. So that also means that bonds rising. Here we see the German bond future, the Bund, and that is actually back into higher levels. And so we had set this support level at about 168. We're well off that now. So there's been a realignment or a reassessment of the risks of inflation going on. Markets are just more fearful about activity. Looking at Brent crude, we're down 4% this morning. We've broken key support there. We put that out in our weekly report on the weekend to clients. The same here on WTI, breaking key support. We've activated that downside target this morning at 65.50. We are seeing crude oil falling away. US nat gas actually did break support here, but it is having a little bit of a bounce today, so we were actually neutral gas for the day. In our weekly report, though, we were bearish. So it's all about time horizon. Bullish, a bit neutral today, but bearish for the week, based on the fact that we've broken that support level. Looking at coal, we're sitting at 125. No paint yet on the price, but looking more resilient. The $100 mark is the key support level. Emissions have recovered this morning. So we did have these downside targets at the start. We've got new targets coming in. So we said to watch those. We're seeing a little bit of a relief rally, but it'll take a lot to clear these downside targets on emissions. And really, we're fairly neutral in the 70s, but once we break below 70, then we're looking to new levels into the 60s. So that's quite worrying for emissions. So we just need to watch that. And we're bearish really below 80 and certainly 85. So keep an eye on that. Gas prices are higher this morning. TTF up 2.6%, MBP up 4.7%. And of course, we're seeing markets falling generally. Higher gas prices are not necessarily a bullish sign for markets. Of course, there are fears that creates in Europe as well. And we look at German power, we are up slightly. We were neutral. We said that the zone was 225, 245. We're just nudging that 245 level, and we do have a new upside target there. The downside target's receding, so power starting to look a bit better than it was. And the same is true of Nordic power. We're up 2% there. Taking a quick look at the coronavirus stats, here we see that UK is winning the league in terms of percentage rise. That's the jump of Omicron in the UK, but we're seeing rates rising really dramatically in Italy. Spain, we're seeing rates going up, still rising in France, 776 per million population versus 1100 in the UK. But we are seeing a rise here, and even the US, of course, which is the key bellwether for global markets, we're seeing rises here, and Fauci on the weekend saying that Omicron is going to hit the US. So markets really starting to look quite fearful, and that's showing up in the screens. Keep an eye on those charts and those targets. That's it for today. Until tomorrow, happy charting. See you then.